Hi there, Robert Wolf here with Terra Firma Business and Financial Consultants. I'm an asset coach and a tax strategist. So welcome back to our channel. Remember, go ahead and subscribe down below if you haven't already subscribed. Hit the little bell so it turns gray. That way you get updated when we do updated content, articles, videos, such. Today's article is about inflation. Okay, we've done a couple articles on the videos on inflation already, but it's continuing to be a more of an issue, like we have said. We started this YouTube channel. I would say probably a few months ago. It was definitely this year, but last year when the CARES Act came through, we started talking about inflation with our clients. We started talking about the possibility of the issues with inflation and what's going to cause moving forward. And now we're starting to see a lot of the issues that are occurring. It's basic economics, inflation, supply and demand. And we have a lot of decisions that have been made by this current administration that are affecting this, that they really have the ability to make controls and minimize what's occurring right now. But they haven't. And so remember, our channel is about the economic termites. It's about this book that I wrote called Economic Termites. Talks about taxes, inflation, time, laws and regulations, and debt. In the book, we don't write about debt. It's a bigger topic than what we need to. But we do talk about in the book taxes, inflation, time, and laws and regulations. And we always talk about the worst economic termite that's out there is laws and regulations. It's our lawmakers. It's our politicians. The decisions they make affect taxes, inflation, debt, and the time it takes for us to build our wealth. Because when there's higher inflation, that means that our investments, our cash flow, has to earn a higher rate of return to stay even or better than inflation. And then the basics of investing is risk and reward. So if you're trying to maintain a pro-inflationary or stay ahead of inflation with your investments, you have to take more risk to get a greater rate of return, which causes more risk. So in our planning model here at Terra Firma, we do things way differently. But that's not the point of this video. This point of this video is really talking about inflation and what these numbers are really starting to look like. So when the Fed Reserve Chairman Powell came out earlier in the year and was talking about inflation being transitory, right? They use these special words, these magical words that are supposed to sound all these unicorns and pigs flying and all this fun stuff. So we go, oh wow, they really got a handle on this. But the reality is that they're using terminology to make us sound like they got a handle on this. But the reality is that this is not transitory. Why? Because we knew this was going to happen. The Fed was still buying back bonds and billions of dollars. We were throwing trillions of dollars into the economy, whether it was lowering taxes, whether it was giving things away. Either way, that was creating liquidity into the economy and the market, and that causes inflation. Now we have the results of high unemployment payments. We have the results of the government giving things away to people. And what happens with that? You have people who are not in the supply chain working because they're getting money, but they're spending money in the supply chain. They're creating more demand because they have the same money, but they're not working on the supply by working and putting widgets and offering services that help the supply chain. And that creates a bigger drag, a bigger push on the supply chain. And so demand becomes greater, there's less supply, and guess what's happening? And so this article today is going to talk about a significant amount of that, and I'm not sure what's going to happen. And the reason being is because we have so many different areas of issues, and you'll find this out in the article, that this current administration being 9 months into it, yes, I know we're in October, but this administration didn't take over until the end of January, when he was sworn in the 22nd of January. And man, talk about a difference, a 180. And I can't imagine how the most popular president right now in American history, how we don't see anybody fighting and raising their hands. I don't see any more Biden-Harris stickers anywhere. I just don't see how anybody's happy with what the current administration is doing. because it's affecting everybody. And this is what we've been trying to say. It's basic economics. It's capitalism. It's not a bad thing. It just means that we're all involved in it. We all feed into it. We all take from it. We all do. And when you don't have capitalistic markets, somebody else is in control. And guess what's happening when we're trying to get ourselves out of capitalistic market? Who has control? The current administration. And you're seeing the results of that. Even though there's examples all over the world with examples of this, we still think it's amazing for some reason, not we, meaning the half that voted for this most popular president in the United States history. Yes, you feel and hear the sarcasm. Okay? And so what's interesting though is that the majority of people who are still showing up to work, the majority of people that are still busting their butt running their businesses, we're still doing what we've always done. We're focusing on our business, we're focusing on our cash flow, we're focusing on the things we can have control over and we can control as best as we can. And figuring out how do we react to the outside environment. So, that being said, let's go ahead and minimize my screen here. We'll go through this article. I want to walk through it. I've highlighted a certain couple things, but let's chat about some of this here and see what we're looking at. Higher inflation squeezes U.S. consumers as food prices and rent accelerate. We're going to talk about a couple things. And so this article was nice enough to create a little summary for us. Consumer Price Index, the CPI, increased 0.4% in September. Food rents account for more than half of the rise, okay? Which, remember, when we talked about articles previously, it didn't include food and rents. And what was my comment? How can you not include roof over our head and things that keep us alive, right? Food and rents, how do you not include that? You'll find why in this article today, why they don't include that, okay? And then the core CPI gains 2%, increases 4% year on year. Okay. Now remember, the Fed goal for inflation is 2%. Okay. So when you use the Fed goal for 2% inflation, what is happening? Well, that means over a 36-year period of time, your dollar's worth half. Okay. So if you have $1 in 36 years, it's now worth 50 cents. 36 years from that, it's worth 25 cents. Okay. So if you're born and you have $1, you become 36 years of age, that dollar that you were born with and mom and dad gave you is now worth 50 cents, purchasing power. Now you go from 36 to age 72, you're a retiree, that 50 cents is now worth 25 cents, okay, because of inflation. That's just 2% inflation, the Fed goal. All right. So yes, there are times where we're below Fed goal, and now we are seeing how we're above Fed goal, and we have a significant concern and issue here. When we're below Fed goal of 2%, what's happening? The economy is fully employed. We're finding that it's moving smoothly. Okay, and activity is happening, and we're finding when inflation goes higher, what happens? There are politicians, laws and regulations that come in and throw wrenches into the overall equation, and that causes the inflation. And so let's take a look at what this article says. So this is October 13th. U.S. consumer prices increased solidly in September as Americans paid more for food, rent, and a range of other goods, putting pressure on the Biden administration to urgently resolve strained supply chains, which are hampering economic growth. Okay? With prices likely to rise further in months ahead following a recent surge in costs of energy products. So we're not even talking about this, but now we're talking about energy products as well. So we're already anticipating inflation in the next few months' numbers to increase. Excuse me. The reported Labor Department on Wednesday could test Federal Reserve Chairman Jerome Powell's repeated assertion that the high inflation is transitory, right? That's the word we were talking about, right? So it's no longer transitory. It is what? Normal, unfortunately, right? We keep talking about the new normal. Powell and the White House have blamed supply chain bottlenecks for high inflation. No. I love how these politicians want to point fingers everywhere else rather than themselves. Who created the bottleneck, supply chain bottlenecks? You did. Now, we have friends that work in Long Beach Port, which we're gonna talk about in 2 paragraphs from now, and they're telling us that a lot of the ships are being required to have 2 COVID tests a day before they're allowed to enter the port. Are you kidding me? These are all people who have been on a ship, a boat, together for however long to go from the original country to here, and now before we allow them in port, they have to have 2 COVID tests, negative COVID tests for the entire crew. Come on, man. Are you seriously? So now, of course, we're not going to see any of that here. All right, that's not going to be in this article. Supply chains have been gummed up by robust demand as economies emerge from a COVID-19 pandemic thanks to more than $10 trillion in global economic stimulus. $10 trillion of global economic stimulus. And the U.S. is more than half of that. About half of it in the United States. How about more than half of that is from the United States? Corona pandemic has caused global shortage of workers needed to produce raw materials and move goods from factories to consumers. Joe Biden on Wednesday announced that the Port of Los Angeles would start operating around the clock along with the Port of Long Beach. Hey, this is a great idea. The people that are working, hey, let's have them work even more in a very high-intense, risky job by taking these huge multi-tons weight containers off of ships onto trucks. And yeah, let's have them work overtime now. Let's have them work around the clock. Okay? That's a great idea. And well, that's nice that Walmart and FedEx and UPS agreed to ship goods 24 hours. Guess what? They do the same thing during Christmas. So it's not. None of this is unique, folks. It's only unique because the current administration put a roadblock on everything. Inflation is no longer transitory, said Sung-Won Soon, professor of finance and economics at Loyola Marymount in Los Angeles. Supply chain bottlenecks are getting worse. The logjam is unlikely to ease anytime soon, despite the latest intervention by the White House, which is correct. Reactor, it's funny how we see that a lot of times our politicians, and I'm not just talking about this current administration, I just mean politicians in general, will make a decision, even local politicians. They'll wave their magic wand, they'll make a decision, but they don't even think about what the potential outcome is, or at least it doesn't feel like they think about it, because no matter what they do, there seems to be a negative reactory issue that occurs from it. Of course, not everybody's going to be satisfied and happy with decisions that politicians make. Of course, I understand that. And not everyone's going to benefit from decisions. Of course, I understand that. But the reality is that we're in such a dire situation that the reactive decisions seem to be a lot slower than they need to be. And the reality is that when they wave their magic wand, it really feels like there was no thought as to the consequences. Okay, maybe the thought was, hey, we're going to look like this great guy, everybody's grandpa. We're going to look like Santa Claus. But the reality is that's not the case. The consumer price index rose 0.4% last month after climbing 0.3% in August. Food prices jumped 0.9% after increases of 4% in the prior month. The largest rise in food prices since 2020 was driven by a surge in cost of meat. Now, remember, these are nationwide. So we're not only just taking the big cities, we're taking the extremely small towns, small municipalities, and bundling it all into big numbers, okay? So, like if you're in Southern California, your numbers are higher than this because you're probably sitting saying, right, 0.9%. You kidding? My milk has doubled. My eggs have doubled or tripled since pre-COVID prices. Yeah, that's not a 0.9%. I agree. Okay. So remember, these are national averages. This is taking all data. Okay. So if you're in certain areas, you're going to see a higher number than this. Now that the opposite is true. If you're in smaller towns, smaller areas where you don't have a lot of this supply chain gut and all this kind of stuff, your prices may be bumping up just nominally, or maybe even have stayed somewhat the same as pre-COVID. which is fantastic. But the reality is this is national, okay? Owner's equivalent rent of primary residence, which is what a homeowner will receive from renting a home, increased 0.4%. That was the biggest gain in 5 years, followed by a 0.3 rise in August. Rent of primary residence shot up 0.5%, the largest advance since 2001. Folks, that's 20 years. 20 years. Okay. What happened in 2001? Right? Remember, we had 3 consecutive years of down market economy. Okay, 3 consecutive years. We had 9/11. This is pre 9/11. Okay, we had tech bubble, right? And then we had corporate scandals, Enron, WorldCon MCI. I can go down a long list of other things, corporations, right? So we had a lot of issues during this period of time. So 20 years. Not even after the 2008 financial crisis have we seen this. Okay? So since 2001, 20 years. Rents are rising as demands in house and cities rebound after pandemic induced exodus to suburbs and other low density. Wow, the cities are so great to live in. It's wonderful. I can walk to the grocery store, to work, to wherever. But where did we see a lot of the social unrest over the last almost 24 months now? Inner cities, in the cities, in the big cities, not inner cities, sorry, in the big cities, low density areas. So what's everyone want to do? Get the heck out. But it's so great. Come on. Let's all hold hands and hug each other. But the reality is that that's not what most people want. Most people want to be safe. Most people don't want to defund police. They like safety. It creates what? Oh, an environment to where you feel like your kids can go out. Or maybe you could go for a walk with your significant other and not feel like something bad's going to happen. Okay? Economists expect rent, which account for nearly a third of the CPI, will be a major source of inflation in the months ahead. You better believe it will be. As shelter prices continue to pick up steam, it would mean higher inflation is more baked in than originally thought. Oh, shocking, because what? The core CPI doesn't include food and rents. So now we're saying, okay, now it's big. Duh. Food and rents account for more than half of the increase in the CPI. Economists polled by Reuters had forecast the overall CPI could rise 0.3%. Folks, shelter and food, that's what keeps us alive. Okay? Shelter and food. Sure, energy is important, but energy is important because it keeps our environment comfortable. But it also keeps the production of materials and products and services going, right? Doesn't it? Besides our cars. We want to think energy is just all about our cars and we need to have zero omit. No. How do you think the food gets from farm to you? There's energy costs associated with that, whether it's the tractor, right? We're not using horses and buggies anymore, folks. In the 12 months through September, the CPI increased to 5.4% after advancing 5.3 year-on-year basis in August. Though gasoline prices rose moderately relative to August, prices at the pump have accelerated after the price of Brent crude oil shot above $80 a barrel. Natural gas prices have also surged. Wow. No one saw this coming when Biden and the current administration said, hey, we're going to shut down these pipelines. No one saw this coming. This is a shock. Oh my goodness. Right? Now our administration is begging OPEC to produce more. Why? Why in the heck did we do that? This is why energy prices are increasing. So we said, hey, we can sustain ourselves. Current administration comes in and says, well, forget ourselves. Let's go do everything else. So we have people that were part of the energy industry now aren't producing as much. Why? Because now we're going to outside the U.S. And so what's happening to those people who are working? They don't have jobs anymore. Wow, how's that work? I didn't know that. Excluding the volatile food and energy components, the CPI climbed 0.2% after edging 0.1% in August. In addition to rents, the so-called core CPI was lifted by 1.3% increase in the cost of the new motor vehicles, which marked the 5th straight month of gains above 1%. So good luck. Have you driven by a new car lot or a mall, auto mall anywhere? You remember you used to see cars side by side, almost like they couldn't fit all the cars they have on the lot. And you remember you used to see these big sale signs, and people would come and they had balloons in the sky, right? And you'd see tons of consumers, and oh my goodness, it was just there was a. Now what do you see? You see one new car. You see about 10 to 20 feet between the next new car. You see 10 to 20. They try to park them angled. So from the street, it looks like it's the lot has a lot of cars, so you don't see the big gaps. Okay. Well, why is this? Well, a global semiconductor shortage has forced auto manufacturers to cut production. Why? Because those semiconductors are all made where? We don't make them here anymore. Interesting. Okay. So the average price of a new motor vehicle topped $45,000 for the first time ever in September, according to Kelley Blue Book. Now, here's the interesting thing. If you can't get new cars, but you need a vehicle, what are you going to go look for? A used car, right? Well, what do you think's going on with used cars? Their pricing is skyrocketed. Why? Because supply and demand, which causes inflation. Oh my goodness. Who would have thought this would have happened? Unbelievable. So there were also increases in the price of household furnishings and operations. Well, definitely household furnishing and bedding. Why? Because people are leaving the cities. People are leaving a lot of these blue states, a lot of these very liberal democratic states. Why? Because because of what we're talking about here. Because of the crazy decisions that are occurring. This is the biggest gain in just furniture and bedding since March of 1988. Holy cow, this is like 40 years almost. Consumers also paid more for motor vehicle insurance. Let's throw that in there too, right? Holy cow, are you kidding me? Though prices for airline fares and used cars and trucks fell because there's no more used cars. You had almost a whole year where you couldn't get new vehicles. So, of course, there's not enough vehicles, so you're not going to sell. Or people are holding on to their vehicles because they realize they can't get a new vehicle and sell their used vehicle. Economists expected a rebound, noting that the air travel was picking up as infections driven by the Delta variant of the coronavirus subside. Well, how in the world are infections driven? We're all wearing a mask. Have any of you flown lately? They pack you in sardines like pre-COVID. You're required to wear a mask everywhere in the airport. The moment you step on, you're threatened. It says it over the PA system. Everywhere it threatens that if you don't have your mask on, you're going to be banned to fly. You're going to go to jail. There's like a $2 billion fine if you don't have your mask on, and 6 feet apart in the airport to board the plane to go sit 2 inches from the person next to you. Okay? We all see it, right? We all wear masks. Double masks, people are vaccinated, all this kind of stuff, yet the Delta variant of the coronavirus subsides. It was just picking up in air travel. It's ridiculous. Sorry, I'm just getting frustrated with this whole thing. And you probably are too, so I apologize for getting your blood pressure up too. The so-called core CPI rose 4% on a year-to-year basis last month, matching the gains of August. Accelerating wage growth is also exerting upward pressure on inflation. Who would have thought that wage growth would go up? You can't hire people to do basic jobs, so you have to do what? Entice them with more money or sign-on bonuses so they come and work part-time. The government reported last week that the average hourly earnings increased by most in 7 months on a year-to-year basis in September because of work shortage. It's not because of worker shortage. It's funny how pre-COVID we had the highest fully employed economy ever. And we're talking about now, it's like people disappeared. They just vanished. And all these jobs are still there, and all these people just vanished. And we can't have babies quick enough and get them old enough to work. And this is what I'm talking about, the consequences of the government making decisions, giving people money, giving them free stuff, telling them they don't have to pay rent, paying for their student loans, doing all this. Hey, we're going to give you, all you're doing is trying to get voters. Okay? Look, you stole an election. You've already created it to where the people don't trust you. You're not making any friends. So stop trying to make friends and make business decisions to run our country. Our previous administration made business decisions. You may not have liked the person, but most of the time we don't like our boss anyways. So who cares? We're not going to invite Biden over to dinner. He's not your buddy. He's not your friend. You don't invite your boss over to dinner. Okay? So we need someone who's a leader who will make decisions whether you like them or not. And guess what we had? Somebody who did that. We had the lowest unemployment in every sector. We had a full-blown economy that was just humming and going. Every aspect, wages were going up, even though we had everybody employed. You look at all the numbers, inflation was controlled. Look at all the numbers. You want to believe in the science? Go look at the numbers. Okay? This is ridiculous. I can keep going on and on about this, and I'm really not going to go through this. They're expecting the economy grew to 6.7%. Well, when you don't do anything and all of a sudden you can't get stuff, strong inflation could force Fed to increase interest rates. Shocking, right? So none of this is a surprise, and I'm not going to continue on about this. I apologize. I get a little amped up, and as a business owner, we should be amped up. As a business owner, we need to be focusing on what we can control, and that's our business as best as we can. Okay, but also we got to control our cash flow. That's the most important aspect, and what we're trying to focus on is cash flow. How do you control your cash flow? How do you minimize those expenses that are out there so you have your positive cash flow, you have profit, you're able to build and grow your business the way you want, and also your personal wealth, right? That's important as well, because if you're working and putting everything in your business and you don't have anything off to the side, so when next time you're a non-essential business or this last time you were non-essential, how are you going to survive that next threat or whatever they're going to do? And is that fear-mongering? I don't know. The reality is we experienced it. So it could happen again, right? So I don't know. Is it going to happen? I don't know. I don't know what's going to go on. But shouldn't we be prepared and plan for it and be focused on it? And that's what we try to do with our clients and the relationships we have all over the country. And why we talk about these economic termites. It's very important. It's very important to have a plan to be able to exterminate or control these economic termites so they don't destroy your wealth without planning. Just like termites destroy the wood in your home. You don't realize you have a termite problem until it's too late. Don't wait till it's too late with your economic termites. Okay? So click on the link below, subscribe to this channel, give us a thumbs up, add some comments and questions and concerns to the comment section, help us to improve this channel. If you want to reach out to us, you want to get some information from us, feel free to reach out to us. We'll be happy to work with you and work with your advisors and your tax people and everybody involved and see how we can help your situation, your cash flow, and take control over what's most important to you, and that's your livelihood. So, and your community, because you're part of a community. So once again, my name is Robert Wolf. I'm an asset coach and tax strategist with Terra Firma Business and Financial Consultants. Thanks so much.